So you just got into an accident and you're wondering, how much is my insurance going to increase? Oh crap, is this going to be bad? Let's determine a couple things before we get started. Let's figure, first of all, whose fault is this accident? It really depends on a few major factors. One, what state you're in, because each state is not the same. I'm in Michigan. We're called a no-fault state. So I go off and claim mine, they go off and claim theirs, and no matter what happens, we all have a rate increase. Thanks, Michigan. If you're in Ohio, then you're gonna have more of a split coverage. If you are 60% at fault and you are 40% at fault, your two insurances are going to change those hands and pay whose portion it is. And your car insurance is going to increase probably the same no matter which way you go, but each state does them differently. If you're in Texas, for example, you're going to have a rate increase no matter what happens, even though you still have, similar to Ohio, but the not at fault claims count against you. The unfortunate part is comprehensive claims even count against you in that state as well. So there's a big difference. The other piece, not to confuse you, but the thing that you have to know is some companies go back 3 years for claims, some go back 5 years. Stay tuned because I'm actually going to give you a pointer that's going to help you in the long term if you do have this claim. There's a few things that you should know that's going to help you get this corrected a lot faster than if you just wait and let it disappear. So let's start off by telling you the flat answer, the average. So typically, according to Bankrate, the average increase if you're at fault in an accident is about 34%. Now that's not always the case. I've seen a lot of companies only go close to that 15% range, but across the board, if you took every state, every company and mix them together, you're looking at about a 34% increase. So if you're paying $2,000 a year, you're going to be closer to the $2,700 per year at this point. Age does play a very large factor in this as well. So if you're under 25, that is going to increase or impact that a lot heavier than if you're over 25. The reason being is if you're younger than 25, you're automatically a high risk. If you're over 25, you're a lot lower. If you're 50 to 70, you're in the best bracket right now. So you're not going to be as concerned or see as big of an impact on your actual policy. If you do, we're going to want to talk about that in the end, where I give you those pointers of some options that you guys have. The other piece that you have to determine is if you're carrying full coverage or PLPD, just personal liability and property damage. That's most states require that. If you just want state minimums, then your impact isn't going to be as large versus somebody that wants full coverage, mainly because the insurance just had to pay a claim to somebody else, and they probably had to fix your car that was a full coverage vehicle. So they almost got double hit on that claim, where if it was just liability only and you didn't do full coverage, which is collision and comprehensive, then they're not paying for your car. Your car is just done and totaled and you're just out of car, but they still had to pay for the other person's. So on this side of the coin, they had to pay almost twice as much, or depending on the cost of your vehicle, where on this side of the coin, it wasn't nearly half of what they would have to pay. The risk is a lot lower here. So on the PLPD or the basic car, you're looking at about $563 on average per year is your current cost. That's going to bump it up to about $803. So you're going to see about a $300 per year increase. On this side, you're going to go from an average about $1,738 per year to about $2,200, almost $2,300 per year. You're going to see a lot larger of an increase in that cost. Now, the difference you're looking at is like $200 to $250. We'll just say $300, depending on the state that you're in, to about a $500 to $600 or even a $650 increase per year. There's a big difference in those rating factors. So I'm sure all of you guys are curious, so what is my insurance company going to do in my state? I can't speak specifically to the state. Yes, we are going to go over those pieces I told you to help you get out of these, but let's go over each company. So I'm actually going to steal this from a company. This is according to Google. We won't go to Bankrate, and they're just giving us some averages. They don't say where they got the data from, but they're fairly decent as far as like knowing what they're talking about as far as numbers go. Usually they cite where it came from, and I don't see that on here, but if I had to guess, they probably pulled their own data. Otherwise, it went to III.com, which is a major place where you get a lot of data and facts about the insurance industry. So for those that are with Allstate, you go from $1,920 on average to $2,366. Pretty big increase. For those that are curious, at a State Farm agency, from $1,422 on average to $1,700 $14.73, Progressive $14.19 to $23.53, Nationwide $14.75 to $22.58, a lot larger, AAA $2,007 to $2,883, so a big difference there. American Family, not as much, $18.27 to $2,023, and then we have Geico, which is $13.25 to $19.25. I know I didn't list all the companies that are out there, and there are more available, but keep in mind your state does matter as well. You'll notice that some of the companies didn't have as big of an increase, and the reason being is your profile or your tiering. So if you guys want to learn more about the tiering, I will link the video up here to where you can learn about the different tiering levels and how those affect your rates. American Family is more of a middle line tier, kind of borderline the third tier, and they're not going to raise it as big because that's actually normal for their customers. That a lot of their customers have those type of claims, and so they're not going to impact you as much. Where AAA is that second to first tier, where they're looking for a little bit higher or more tightened up policy, and so they are going to have that $700 to $800 increase, where you only see $200 to $300 with the type of American Family. Keep in mind, it depends on what type of company, how quickly you want their claims to be handled, how well and rated they are, which I will also link a video here so you can watch the different rating systems and how to pick companies based off of consumer feedback, so you can see, okay, do I want to move to an American Family company where they aren't going to raise me as high, but they may not pay my claim as tightly as my AAA policy. So keep in mind, I have seen AAA be a lot more lenient with comprehensive claims than most companies. So it depends on the actual type of claim that you're having and which company that you're with. So if you made it to the end, I would love a thumbs up. I'm going to teach you guys a few things that you should know that if this happens. So number one, check with your company before you go forward, because you may have applied, or if you're not already had an accident, you can check ahead of time to see if you have accident forgiveness or claims-free forgiveness. And you're going to get a really good kickback because the first claim is usually wiped away completely. Keep in mind, if you have a second claim, in most cases, in almost every case I've seen, if you have that second one, it will go back to the first one if it's in the time frame. So if you're in a state that rates for 5 years, they will count the first one if you have a second one no matter what. As long as you're in that 5-year span. Same thing if it's a 3-year rating state, then it'll only go back for the 3 years. The part that I would recommend that you guys do is, one, check with that. If you're with one of those companies that does give you those extra benefits, and we mention those on this channel, I'll list one specifically as Safeco. I really love their packaging because they can give you claims free as long as you don't have an accident now and you haven't had one in the last 3 to 5 years. You can, depending on the package you buy, get it instantly. Some companies make you wait 3, 5, even 6 years to be with them before they'll even allow you to apply to get that. With Safeco, it's a little bit different, and that's not to say they're the only ones. It's just one of the companies I've had really good dealings with where they can apply that right away. But you have to buy a certain package. And where the benefit comes in is those packages sometimes are almost free. What I mean by that is there's a cost, but a lot of those come with cash back. And cash back means if you don't have any claims or tickets, they're going to give you 2.5%, sometimes even 5% check back to give you money back for being a good driver. And that puts you in those tiers to where you have the claims-free accident forgiveness, they'll waive your deductible on comprehensive claims. There's a whole bunch of stuff that they give you in benefits that outweigh the cost of that. But if you're paying $180 for it, and your policy is a $2,000 policy, and you get 5% back, you're gonna get $100 back of the $180 that you paid. So over the course of a year, $83 to me is worth having the claims-free accident forgiveness, vanishing deductibles, all of those additional benefits that you get. Check with your company to find out if those are offered. The other tip that I have for you is it's time to shop. I know this channel is like, oh my gosh, this insurance guy's telling me to shop around. He wants me to click the link below. It's there. But that's not the reason I want you to shop. Yes, you can check up to 30 different companies with the link below. You can download the app or text in or even call somebody and get some advice. But the reason that you should shop at this point is because you're not going to get that rate increase until your renewal. And it's not on your driving record until that claim has been filed and paid. They already have to fix the car, whatever company you're with. It's already on the books. If it happened during the time that you were insured, they're responsible for it. That's what you purchased. You can get an estimate from them, from their claims adjuster, or you can even pretend get a new quote from them to see what it is, and then just put the claim on there to see what the increase is. If the increase is manageable, great. Have them fix it. Great company, love to stay with them. I've had a couple claims with the company I'm with now. I've been with them for 7 years. I've been happy, and it did go up, and I haven't been upset because I knew that ahead of time. If it's too large and it's not manageable, or you just don't like the way that they're handling it, it's time to shop, and it's time to shop right away, because it's not going to be on your driving record yet. It's going to be a follow-up. Here's the cool part. Your current insurance now is automatically going to add that on your renewal. You've already paid for a guaranteed price for an set amount of time, and they can't raise you until the next renewal. When that renewal hits, it's a guarantee it's going on there. They're the ones that filed it. It's going to flag up instantly, and it's going to be there. If you shop and you buy another policy and they don't pull that history, their next renewal is a hit or miss. And in most cases, it's a miss where they don't check it, because you have to have a reason for them to recheck your driving history. So if they get to that next renewal with the new company, sure, they could just say, you know what, it's a new customer. We're going to rerun their clue report that's pulling the accidents from the state. And they may see it, and then you're going to have a rate increase. Or, like what I see more often, I would say it's about a 60-40, but they may not even pull it. So you may never even pay for that accident or the rating for that accident for the next 3, 4, or 5 years. So then the last tip that I can give you is know what company distance they have. And what I mean by distance is, what's their rating periods? In my state in Michigan, we can go back 5 years, and almost every single company rates you for 5 years. The company I'm with, which is Citizens Insurance, only goes back 3 years. So the accident that my wife had 3.5 years ago is gone. It doesn't even count on our record anymore. So my price went back down. If I were to switch to another company or a State Farm or an Allstate or whoever does a 5-year plan, I have to pay a higher amount, because that 5 years, it's still on there 3.5 years ago. So I'm gonna get surcharged. Keep in mind, if you're near the end, I wouldn't worry about it too much, because they really don't care once it gets close to that 5-year period. It slowly kind of dissipates to where they don't rate it as hard each year that it disappears. So don't make that the forefront of why you're shopping. It's more so just to find out which company offers those best options. Anyways, guys, if you guys do want to check multiple companies, I will put that link below. I hope this was helpful. Definitely give me the thumbs up. That helps the algorithm share this video. If you want to subscribe for more of these tips and advice, we're going to help you guys save some money, learn some coverages. Hit the bell icon and turn that on so you get notified when the videos go live. Otherwise, I would recommend that you guys check out the video here that will walk you through some discount options that you have as well to get you some better deals on your insurance. I'm Mark with Think Insurance. I'll see you in the next one.